Hi everyone, this is Linda from Insight Financial Group. This bonus section is going to cover a couple things. Just want to go more in detail and then also just review some things that I'm not sure if I actually went over, but think it's important because there's usually we make common errors in these sections. So first I'm going to discuss classes, sales receipts. Then I may go into credit, so customer credit and vendor credit. Then also want to explain how to pay a credit card correctly, talk more about transfers, and then also talk about when an owner puts money into the business and then also when they take it out. Also want to talk about merchant fees. So that's regarding PayPal and Stripe. So how to record those fees and revenue correctly. Also want to bring up something regarding the bank balance versus the QuickBook balance and the banking function. And then also, let's see what else, inventory. So I may end up doing a separate video for inventory, but we'll see. So let's first get started with classes. So I am going to go over to QuickBooks. And so this is actually my company file. And so classes, if you go to the wheel on the right hand side, and if you go to list, and then you go to classes, you will be able to create classes. So remember, depending on your QuickBooks subscription, you may not have access to classes. So, and that's okay. So I will show you a trick if you do not have the class function in your QuickBooks subscription. So for my business, this is the classes. And so as you can see, I actually put a number in front of my class. So to me, it just makes it easier and it just makes it more organized to have some type of number, or maybe you want to use a letter or some other coding mechanism. But to me, it seems like to me it's just nicer and cleaner. So classes are used so you can group transactions. And let me give you an example. A good example is if you receive a grant. So say for instance, you receive a business grant. And at the end of the year, they say, okay, please give me a grant report. Well, you need to create a class in QuickBooks so you can record all of the revenue and all of the expenses against that grant. So every time there's a deposit, you would actually enter that class also in that transaction. And then also when you're paying money out, such as whatever it be like rent or utilities, you would put that grant in that class field. So for me, I have accounting, coaching, QuickBooks subscription, training, academy, Sisters Alliance, that's kind of like my side project, and then operations. So for your business, you may want to say, okay, I want a class where I can track individual departments. Let's just say departments, maybe it's human resources, it is the management team, and then maybe like the support team. So that's three classes. Also, classes used for product. So, for instance, if you offer multiple products or services, you may want to say, okay, I want to create a class for product one, and I want all of the revenue and all of the expenses to go to that particular class. You can also create classes. Everyone does this differently, but you can use it for location. Now, QuickBooks does have a location list if you want to use that. So classes, once again, is really to group. So if you, for instance, if you have two locations, you probably should create a class for location one and location two so you can see which location is bringing in what, type of revenue, expenses. And so that way you can say, okay, wow, location two is really making a great profit. Let me work on location one because that's, seems like it needs some help. So that's what classes are used for. A lot of nonprofits, of course, use classes because they want to separate out grants, unrestricted and restricted funding. So for me, let's just use this as an example. So as you can see here, the first class that I have is accounting. So I offer multiple accounting services. It could be bookkeeping, it could be tax, it could be CFO services. So say for instance, I want to actually break that out in more detail. So say if I want to create a class. So I would go to new here in the right hand corner, and let's just say I want to do I want to just break that out. I want to say bookkeeping, and then I want to make that as a subcategory. So I'm going to make that as a subcategory of accounting and then hit save. So as you can see, you can do subcategories. So say for instance, also let's just say for fun, CFO services also will be a sub, and it would actually be a sub of accounting. So that's how you would do that. So say for instance, you actually receive a grant. So you receive a grant from, let's see, Facebook. So say you received a business grant from Facebook. So you would actually go to new and you would just say, Facebook grant, and then click save. And say, for instance, you're expecting to receive this grant over the next 5 years. What you can do, you can create subclasses and say, okay, Facebook grant 2021, then create another class, Facebook grant 2022, so on and so on. The good thing about classes is that you'll be able to run the report. So over here on the right hand side, the action, you can run a report, which is in blue. You can edit, so you can change the name of the class, and you can also make it inactive. When you make it inactive, it does not delete it. It just makes it inactive and you do not see it on the screen no longer. If you run the report, for that particular class, it will list every transaction that has been coded to that particular particular class. So that's the good thing about classes. So for instance, if you, like I said, if you win that Facebook grant and they want to know, okay, what did you spend the money on? You can just come here, select run report, and it will show you all the transactions that were recorded against that class. So remember, the key is, yes, you set it up here, but you also need to code the transaction. So if you're using the banking function, or if you're creating an invoice or creating a bill, there's the class field. And actually, let me see something. Let me show you invoices. We're going to create an invoice. And it'll let me create an invoice. And when you create an invoice, you can see here in that, well, oops, sorry. This field here, class. So this is where you would actually select Facebook. So remember, if you do not fill out this field here, you will not be able to run a report by class. So every time you create a transaction in QuickBooks, you're coding something in the banking function, make sure you're filling out this class. That is very important. So hopefully that helps with classes. If you have any questions regarding that, let me know. So now we're going to go into sales receipts. So we didn't get really into what sales receipts Or I know in the last class we talked about that. Someone had a question, what's the difference between sales receipt and an invoice? So right now, here's an invoice. So an invoice is what I call like a two-part process. So an invoice is you invoice the customer, you create an invoice here in QuickBooks, you email it to the customer or mail it to the customer saying, okay, you want to purchase this particular product and service. Here is the amount. The client gets that information, gets that invoice, and they pay it after so many days. A sales receipt basically means you have received the payment immediately. So maybe they came to your office, picked up the product because they needed it right away. You can record a sales receipt. So let me get out of here. No, I don't want to save it. Hopefully I don't. I may have to log out. Oh, no, I don't want to save. Oops. Do you want to? That's the thing about QuickBooks. If you go too fast, you can. So I'm going to go to the sample company because that would be easier. And so we can really play around with it. So you can actually see how sales receipt works. So once again, a sales receipt is you receive that payment right away. So there was not an invoice created, no other document. Maybe they just came right into the business, right into your shop, whatever it may be, and you just record a sales receipt. So with the sales receipt, it's still thinking. You can go to New on the left-hand side. You can select Sales Receipt. And so sales receipt will record the revenue for you, and it's also will record the increase to cash. So sales receipt, so similar to an invoice, you have to put in the customer. I'm just going to make up a customer. Sometimes QuickBooks is real finicky about that. So that is, I'm going to click Save. So one thing I do want to point out is you see that actually this is my business name. It's not in QuickBooks, but what you can do, you can just go add new. So this is a good thing about QuickBooks. So say for instance, you have a new customer and it's not in there, you can just go ahead and directly start putting the information in here instead of having to go to the other screen. So it'll take you right here. So once again, say if you're entering a customer and you realize, oh, it's a new customer, it's not in yet, you can go ahead and add it right from this screen here, put in the information, save it, and then it'll be right there. And I keep forgetting to save this. I'm going to go ahead and hit save. I'm just going to put something at the end so it will save. Okay. Email, all that good stuff. So sales receipt date. This is the day that you actually receive the payment. So you want to select that date. Then you want to put the method of payment. Was it check? Was it by credit card? Whatever the case may be. Credit, if it's by check, I always like to put the check number. And then you want to put the account you want to deposit to. We're going to go ahead and put the checking account. And then the sales receipt, you're going to have to select, okay, what product or service did you sell? I'm just going to say concrete, one quantity at $50. There's no tax. And that's pretty much it. That's what you pretty much have to do. You can attach a document to the sales receipt. So maybe it's an email, maybe it's some type of, you know, um, whatever documentation, whatever it may be, you can attach that. And as you can see, the subtotal is 50, total is 50, amount received is 50, balance due is 0. So the product or service was $50, you received $50, so there's nothing remaining. So you want to make sure before you hit save and you exit out, this is correct. So total is 50, you received 50, the balance due is 0, and you click save. I'm going to show you what QuickBooks does behind the scenes regarding the sales receipt. So once again, if you go to more and then go to transactional journal, you'll see what QuickBooks has done behind the scenes. It's basically, not basically, but it is recording the revenue, and it will record the increase to your checking account. And it is opening. Let's see if it will open, 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 open. There we go. So this is the transactional journal for the sales receipt that we just created. So remember, anytime you create a transaction, whether that's an invoice, a bill, a check, when you code your transactions in the banking function, QuickBooks creates a journal, creates a transaction for each thing that you do. So for this particular sales receipt, so checking, it debited here at the top, debit $50. So that means when you debit a checking or savings account, it increases the balance. Here, let me spread that out so you can see landscaping services. This is a revenue account. So with a revenue account, you credit. When you want to increase revenue in accounting, you credit. So this is what we mean in accounting when it means two-sided entry. So in accounting, you always need a debit. So you always need to debit an account, and then you also need to credit an account. So in accounting, we have our own lingo. So there are certain accounts, if we want to increase, we debit. If we want to decrease, we credit. So with revenue, once again, if we want to increase, we credit. Sometimes this gets confusing because if we just take accounting out of our mindset and if we think, okay, well, we want to increase revenue, so why wouldn't we debit? Well, in accounting, it doesn't work that way. There's particular accounts, if you want to increase, you debit, and then there's accounts where if you do want to increase, you also credit. So, and I have a chart in the PowerPoint presentation that explains that better. So that's regarding sales receipt. So you can either create an invoice or you can create a sales receipt. And it's your preference. It's really what you want to do. So let's go into how to pay a credit card correctly. So there is new. If you go over to new, QuickBooks now has a item here called pay down credit card. And if you select pay down credit card, QuickBooks just recently added this because what was happening, people were getting confused on how to pay a credit card. So I'm going to go back over to the PowerPoint presentation and I want to show you why, possibly why people were being confused. So if we look at, and actually relates to what we just discussed. So a credit card is considered a liability on the balance sheet. So credit card, so liabilities is something you owe. If you want to increase a liability, you would actually credit. So how we just reviewed that transactional journal, you would credit. If you want to decrease a liability, you would debit. So for instance, if we take the credit card, I am going to create a text box. So when we go, so say for instance, we purchase something from Amazon. We purchase a printer. When we purchase that printer with a credit card, this is what QuickBooks is going to do. So we went into our banking function and we said, okay, this is printer is going to be to supplies. QuickBooks, the transactional journal, is going to do this. Transactional journal is going to debit supplies, let's just say $300, and then it's going to credit the credit card. And it's going to credit the credit card because we are increasing the balance. So as we see here, liabilities, if we want to increase, we credit. So if you just think about with the credit card, so every time you purchase, your balance is going up. So remember that. So every time you're purchasing, your balance is going up. If you pay on the credit card, so let's just say we pay monthly payment. When you pay the monthly payment, let's just say the balance is $300. We're going to say, well, that 300 is now going to debit. So that means the balance goes to zero. Move this up a little bit. And then and then the offset of that is saying, okay, we pay that out of our checking account. So this is going to be a credit. So now cash has decreased because we paid. So if we're paying the monthly amount, QuickBooks, when you code this transaction, QuickBooks is going to say, okay, you paid on your credit card. QuickBooks, you're going to debit the credit card because you're basically decreasing. So if you look here at the chart, if you want to decrease a liability, you debit. And then the cash, since we're paying money out, we're going to credit. And what was happening, so what people were doing, some people, I've seen this, some people will actually say, okay, they'll go ahead and pay the credit card, but they would go into the banking function and put it to bank fees or something like that. Or the credit card payment would go to another business account, which is just incorrect. So that's basically what was happening is that the payments of so many businesses were recording it to the wrong account. So if you go to pay down credit card, and I suggest you just use this function when paying down the credit card. So once again, if you pay the full balance, 10% of the balance, whatever you pay, use this function. So you will go here, you will select the credit card that you paid on, the payee, I don't know, you can put in Chase, bank, that's new and click save. How much did you pay? Let's just say it was $300. Date of payment. Let's see. What did you use to make this payment? So what did you use, your checking or your savings? So you would put your checking. Was it made? I made a payment with check. You would select that. You can also put a description here. You also can attach the statement. I like attaching the credit card statements to these type of transactions. Feel free to do that. I know sometimes people will maybe attach the email. That's fine too. So this is how you pay a credit card. So hopefully that explains particularly this here, how what QuickBooks does. So as you can see, Basically, with QuickBooks, they ask you to create what I call things, and then what they do behind the scenes, they do the debits and credits for you. I call that they do the accounting work for you. So that's how you would pay on a credit card. And of course, you would hit save and close. So that is the credit card. Now, let's talk about transfers a little bit more. So I'm going to go over to the banking section. So transfers, and let's see if I can find an example, a good example that possibly could be a transfer. Well, let me go here to the savings account. That may not be a good example, but we can use this as a pretend. Oh, I don't want to use that one. I want to use something that I know will work. That's a refund. That's an expense. That's a sales receipt. That's a payment. So, okay, let's just use this as a, pretend. So transfers is basically, as the word is transfer, moving money across accounts. And I know there was a question in one of the classes regarding credit card. Would you just do transfer or would you do credit card payment? And I know we just talked about credit card. You can do either, but you want to be careful. When you do a transfer, so say for instance it's $200 was a transfer. You want to record a transfer. You want to make sure you select the correct account. So if you're doing a transfer, you need to either transfer to a bank account or to a credit card account. And if you're transferring to any other account, you may want to check with the accounting professional to make sure you're doing that correctly. So remember, transfers really are just from account to account. The credit card, I wouldn't necessarily use a transfer because that's where there could be some errors that will come up. So once again, a transfer is between bank account to bank account. It also can be from bank account to credit card. It's just you just have to be real careful on what account you select when you're doing transfers. So for instance, with the credit card, let's go over to the credit card account and let's see if we can find, well, they don't have a payment here. But say for instance, this was a payment and they made it with a checking account. So actually here you can select record as credit card payment, but I do know that some people did not have this in their QuickBooks. So if you do not have this option here, you can select record as transfer. But once again, just be real careful. If you're going to say this is a payment from another account, make sure you're selecting the right account that that payment came out of. So that's for transfers. Now I want to talk about owner's equity. I'm going to go to the balance sheet and hopefully this sample company has owner's equity. So that's way the at the end of the balance sheet and it does not. So let me do this. I'm going to create a transaction. I'm going to pretend that the owner has deposited money. So it looks like they don't even have, yeah, so they don't even have, I'm going to create now a owner's investment account. Okay. So account type, I'm going to go equity. I'm going to say this is a, let's see, what's a good, it's not personal income. I'm going to just say owners. Yeah, that's what I really don't. I want to choose, it's not personal. It's not that. Okay, I'm going to go ahead and just select owner's equity. No, I'm sorry. I'll explain what I'm doing. So owner's investment. I'm just going to call it owner's investment. So as business owners, we always invest our own money, particularly in the beginning. So you may have an account called owner's investment. Other accountants may call it something else. So this is an account. That's what I'm calling. So this type of account is always an equity account. And then you can just select owner's equity as the detail type. And then I'm also going to select, not select, but I'm also going to create a personal, I don't want to call it personal expense, but I guess I could. No, I'm just going to keep it owner's equity, sorry. And I'm just going to say owner's withdrawal. So this account will be used when the owner takes out money. So if you're taking out money for personal reasons, or maybe you take out money to invest in another business, you would use owner's withdrawal usually. But if it's more complicated than that, you can talk to an accounting professional. So I'm going to go ahead and click save. What I'm going to do is now say, okay, the owner invested, let's just say $5,000, made a deposit. I'm going to go ahead and put owner's investment here. Um, you can put receive from, let's just say the name. Of course, it's not in there. So I'm going to go ahead and hit save. And then I'm going to go ahead and close. And then now that is recorded. Now, then I'm going to say, okay, say the owner takes out money. So now I'm going to go to just create an expense. Actually, no, it wouldn't be an expense. They would actually be a check. So say the owner writes out a check to themselves. Actually, this is a good example. So as you can see, QuickBooks is telling me that, okay, there's a customer already with this name. So what I'm going to do for the owner, I'm just going to put vendor after it. So you cannot have a name listed twice, because it can happen that you can have a customer who's also a vendor. So what you can do is, what I suggest, you always put either, put vendor or customer afterward. So I'm going to go ahead and select save. Um, Going to just say owner withdrawal, owner withdrawal, and let's just say, I don't know, 15,000. They took out 15,000 for whatever reason. Of course, you can make attachments, not make, but attach any documents here. And then I want to show you on the balance sheet how that looks. So on the balance sheet, as you can see, it says owner's investment 5,000, so that's money that the actual owner putting in. Owner's withdrawal is negative 15,000, so that's how it should look. So this should be a negative number. So once again, as an owner, if you're putting money into the business, so that means you're taking your personal money, it needs to be coded to a equity account that is just for the owner's investment. And once again, you may call it something else, but that's how it needs to go. Owner's investment should be here, should be a positive number. If you take money out, so you instead of this being owner's withdrawal, you may say personal withdrawal, whatever it may be. When you take money out of your business, so it's not for a um, business expense because it's not hitting the P&L, you want to hit this particular account. So that's how it should be coded. A lot of times we see this as an error because this is a accounting transaction that usually not usually, but all accountants would know. But if you didn't take accounting, it's just something you wouldn't know. So no big deal. But just wanted to show you that. So now I want to talk about how to record. I'm going to go to a new slide. How do you record PayPal, Stripe, what's the other? I don't know, Venmo. How do you record those deposits from these merchants? So as we know, they charge a fee. And when they make the deposit, it's actually the revenue minus the fee. That's the deposit. So if you think about, so say for instance, a customer pays by PayPal, your product is $100. Your deposit is not going to be $100. Your deposit may be, let's just say, $95. So revenue is 100 and your fee is $5. What a lot of businesses do, they will say that $95 is total revenue. As you can see, that is incorrect. And why is it incorrect? Because you sell your product at 100, not 95. So really, your profit and loss statement is understated by $5. Because if you just record this $95 to total revenue, you're short by 5 because your product is actually 100. So what you should do is when you get those deposits from PayPal, Stripe, or whatever, hopefully this is one way you can connect. I wanted to make a bullet point. You can connect PayPal, Stripe to QuickBooks. And what I mean by that is just like when you go to the banking function, you will connect it. So you will go link account. And let me back up. You first need to actually, with your chart of accounts, let me put this over here. You first need to create a chart of account. If you have a Stripe, you need to have an account for your Stripe, have an account for your PayPal, etc. Then you will connect your PayPal Stripe. Now, I've noticed lately that QuickBooks is charging, like they want you to possibly get an app to connect these. So before you pay for an app, verify if there's a free app that QuickBooks offer, and you can go under apps in QuickBooks. So you can't go under apps here in the sample, but it will be right over here on the left hand side. I think maybe under my accountant, I can't remember, but there is a selection called apps, and then you can search for Stripe or PayPal and see if there's a free app. If there's not a free app, I suggest you go to the PayPal or Stripe and you can download the report and it will break it out by revenue and fees. And what you want to do when that, let me go to checking, and I'm just going to pretend one of these deposits. So say this deposit is from PayPal. So instead of putting the $55 directly to income, you would go here, you can go split, and let's just say revenue, some type of revenue account. Select, let's see, just a revenue. Let's just say pest control. I am just going to say revenue. Your product was $60. And then let's see if they bank charges. You can also have create an account called merchant fees. That may be better to have an account once again called merchant fees so you can start tracking these fees. Then over here, what you want to do, you want to put, so what is this? The split amount, that's 45. What did I do here? 15. I thought that would be, I had put it in correctly. Minus 55. Oh, sorry. So, sorry, I was adding $10 extra. I realized it was $55. So with the merchant fees, you want to put it in as negative. And you put it in as negative because you want this transaction to net to the net deposit. So your product was only $60. You're going to record that to the revenue. And then the PayPal fee was $5. So you're going to put negative. So it will net. This is the proper way to record those type of transactions. Now, you may not want to record every single transaction. What you can do, I'm going to hit cancel. What you can do, you can take this report, and for the month, if that report says, okay, you know what, we received $100 and then the fees, you can just make one deposit for the month. Or if you want to do it every 2 weeks. But find a way that you're comfortable with so you can record these merchant fees and revenue correctly. Because as you can see, if you just put the deposit straight to revenue, your revenue is understated. So if you are looking, analyzing your P&L, you can, over the long run, you can say, well, I'm losing money, but really you're not. It's just that you're booking your entry incorrectly. So hopefully that makes sense. Let me know if you have any questions regarding that. So once again, merchant fees, PayPal, Stripe break out the deposit. So basically revenue and the fee. And once again, you don't have to do every single transaction. What you can do, you can just go to QuickBooks and go to deposit, and you can make one deposit for the month. Maybe you just want to make one deposit for the week, maybe every 2 weeks. But I would probably recommend, if you can, make the deposit every week. Because what can happen is if you go back and look at your financial reports, they won't be updated in a timely manner. So if you just want to record those on a weekly basis. Now, let's talk about the bank balance and QuickBook balance because I found a report that might be helpful. So the savings account is a good example. As you can see here in QuickBooks, the bank balance is 200. In QuickBooks, bank balance is 200. The QuickBooks says, okay, you know what, you have 200. I'm sorry, QuickBooks says 800. This will most likely always have a difference. There's not a amount that you should say, okay, it's incorrect. What you need to understand is this. So I am going to create another slide. So we have the bank balance, we have the QuickBooks balance. So remember, the bank balance is bank transactions. Of course, bank balance, this is like QuickBooks transactions. So this is can be invoices, this can be bills, this can be journal entries, this can be sales receipts, credit card payment, credit card payment. So that's it. Can I go to the top? There we go. Maybe not. So let me make this a little bit smaller. So I'm going to go here versus bank balance. So this one here, let's say the bank balance is 200. Book says it's 800. So that's a difference of $600. So as a business owner or a bookkeeper or an accountant, you have to ask yourself. So if I was looking at this was one of my clients, I would say, hmm, QuickBooks says 800, bank balance has 200. Is that reasonable? I would ask myself, are there are there um, deposits that I have in QuickBooks that have not been cleared at the bank? So QuickBooks is 800, bank balance is 200. So there could be where there's not deposits that have not cleared the bank balance. So that could be a reason why. Also, you can just say to yourself, are there transactions, recently done in QuickBooks that have not cleared the bank? Most likely in this type of situation, since the QuickBooks bound, so this is a savings account, usually what happens is there's a deposit that has not cleared yet, since this is QuickBooks is higher than the bank balance. Now, there could be, you could ask yourself, are there journal entries or something else going on? Are there journal entries or other transactions that hit this account? So once again, there's no, uh, let's see, amount that you should say, okay, man, this QuickBooks balance and bank balance is totally incorrect. Now, I would say if you have this here, bank balance is negative, QuickBooks balance, okay, you want to look at that. But this could be correct. Maybe you are running a negative balance. That is correct. But what you want to do, you want to ask these type of questions to yourself. So say for instance, this is a checking account and the bank balance is 500. Let's just say it's 1000, but QuickBooks is 300. In this particular situation, it could be that in QuickBooks, so say it's probably maybe you process checks. You could ask yourself, are there checks that have not cleared the bank. So QuickBooks is 300. The bank balance is $1,000. So QuickBooks balance is lower. So that possibly could mean that there are checks, there are payments that were entered in QuickBooks, but they have not cleared the bank. That could be a possible reason. Also, too, once again, are there transactions like such as journal entries or something else that's going on that hit that account? But if you know that you recently, you haven't been doing too much and it's still off, take a look at it. So there's different ways you can do this. So here on the right hand side, you can go to bank register. Turn this on. And this is where you can look at the bank register. You can just look at all the transactions here. And there is a filter here. You can filter, you can just type in, okay, I want to see all the transactions as 200, and it'll bring up all the transactions that had a $200 amount. You can look up all the transactions that have been uncleared or reconciled. You can look up by payee. So this is a good way to figure out, okay, what's going, possibly what is going on. And what you could do is reconcile status. So transactions that have been reconciled, that means it has cleared the bank. Transactions that have cleared means that it has cleared the bank, but it has not been reconciled. No status, not reconciled. So if you still are not comfortable with that QuickBooks and bank balance, I would actually select no status and hit apply so you can see what transactions are in QuickBooks that have not been cleared and reconciled. And you need to ask yourself, okay, are these legitimate? Are they real? Are they duplicates? Are they errors? What's going on? So just wanted to explain that with the bank balance and QuickBooks balance. So once again, you have to get comfortable. So an accountant, we can't tell you, oh, this is correct. Yeah, no, whatever the case may be. We can't tell you that. What we can do, we can give you some pointers and say, okay, QuickBooks is showing this, the bank balance is showing this. So this is where you'll use that bank register and say, okay, you know what? Let's see what's going on. Another way that you can do, you can also go to, let's see, you can go to the chart of accounts and you can select that account. So we can just go to savings. If we go to run report, and we just want to see the transactions. And this is just in a different format than the bank register. So as you can see, it matches the 800. So QuickBooks will give you all of the transactions that total the 800. And this is where you can go in and say, okay, you know what? Oh, I duplicated a check, or maybe I duplicated a deposit. Oh, okay, I see that this check hasn't cleared yet. What's going on? As you can see in QuickBooks, this column here cleared, CLR. If it's R, that means it's reconciled. C, that means it has cleared the bank, but it has not been reconciled because there's a bank reconciliation hasn't been um, done yet. So hopefully that's helpful. Also, too, what I wanted to show you. So this is a reconciliation report, and you can go reports, and you can just type in reconciliation here. This is a sample company, so it will not have a reconciliation report. So every time you reconcile your bank or credit card, it will create a reconciliation report. What you want to do, get a habit of going to the bottom of that reconciliation report and looking at the uncleared checks and payments, and then also looking at the uncleared deposits. And I don't know if this one has any. This one here, this particular company does not have any unclear deposits. So basically, you want to look at all the unclear transactions because that also is driving the difference between the bank balance and the QuickBooks balance. If you think about what we just discussed, when I went to the bank register and I talked about looking at the unclear, looking at non-not status, these are the transactions that are driving that difference, possibly. So, say for instance, so these are back from 2018, 2019. So as you can see, this account was reconciled June 28th, 2019. So, as a business, you say to yourself, okay, I reconciled this in 2019 June, so why is there 2018 checks on here? These are the things that you want to look at, things that are 90 days or more old. Why are they still unclear? And then you can say, okay, you know what? I need to contact the payee. I need to say, okay, did you receive this check? If you have received the check, please deposit it. Oh, you didn't receive the check. Do you want me to reissue the check? Or maybe this is a duplicate, whatever the case may be. But you want to look at this uncleared section because unclear can get very old and then it can keep growing and growing and growing. So, as you can see here for this particular company, they have things from 2018. 2018, a year old, some of this is over a year. So you want to make sure you're understanding what's going on and getting these transactions cleared. And if you need help with that, contact an accounting professional so we can walk you through on how to get those cleared up. Because with the check, say for instance, this check should have never been created, you can create a journal entry to offset it. Also, too, you could create an expense to offset it. But these are the nuances that you really should talk to an accounting professional about. So that is that regarding the bank balance in QuickBooks. Let's see what else. Wanted to talk about more with reports. In our last section, we did spend quite a bit of time on chart of accounts. So in the last section, I had talked about if you don't do anything else, check your accounts receivable report. So this is your accounts receivable report. You will only have numbers here. Once again, you'll only have numbers here if you create invoices in QuickBooks. So if you go to new and you create invoice, you'll only have this report here. And I don't think I mentioned that in the last class. So once again, the accounts receivable aging summary is only needed if you create invoices in QuickBooks. You may also create invoices in an app which may be connected to QuickBooks, so you should have numbers here. So the accounts receivable report, it lists out each customer that owes you. So this particular customer, their total invoices is $629. If you click the $629, it takes you to the invoice. And I call this peeling the onion. So in QuickBooks, anytime you see a number, you go to the layer. You get it. You're finally getting to the bottom. You're finally getting to the meat. So keep peeling the onion. It'll tell you what that number composes of. So here, this is a good way to manage your cash flow. So in a perfect world, you can say, okay, I'm expecting $5,281 to come in within 90 days. Pretty good. Now, if it gets so, like for instance, here, this is way over, like 61 days. This is where something you would say, okay, I need to contact that vendor. I'm sorry, contact that customer and see what's going on. This is how you use this report to say, okay, number one, how much cash should I be expecting? Who's overdue? Who's outstanding? Who do I need to contact? So, anyone probably in these two brackets over 31 days to 60, 61 days, or so on and so on. So that's how you use this report. Also, too, with this report, the number should always be positive. Always positive. If it's negative, that means that a received payment transaction was created. And a received payment means that you received payment, but you did not pay against an invoice. So if you receive payment and you do not apply it to an invoice, it shows up negative here. So say for instance, this particular client, I don't know, they sent in $200 and you process receive payment, it will show up negative 200 here because there was never an invoice here for 200. So just be careful about that. The other report that you want to look at, accounts payable summary. So if you put all of your bills in QuickBooks, so you go to new, you put and you select bill. So you put like your rent bill, your utilities, whatever bills, you put them all in here. Then you will have an accounts payable report. Now, if you do not put all your bills in QuickBooks, you will not have an accounts payable report. Accounts payable report lists vendors that you owe as a business. Once again, as you owe. So we just talked about accounts receivable. That's cash in. This is cash out. So if you look here, you can say, okay, you know what? I need to pay $1,600 within the next 60 days. This is a good way to look at your cash. And you may say, well, I'm not going to pay the whole 1600, but I do know that, okay, oh, in the next 30 days, I need to pay, oh, the 700 plus $86. So this is how you use this report. Also, once again, it should always be positive. There should be no negative numbers here. If there's a negative number, then that means there was a, what do they call that in QuickBooks? I just lost my train of thought. Basically, there's a payment that was entered, like bill payment. That's what it's called. A bill payment was created without having a bill. So, say for instance, this vendor had a bill. I'm sorry, you paid $1,000 to this particular vendor, Robertson and Associates. You paid $1,000. So you created a bill payment for $1,000. That $1,000 will actually show up here as negative because there's no bill here for $1,000. So make sure there's no negatives and make sure this report things are being paid. So I've seen reports that have 2 years worth of old data on them. So you just want to make sure that gets cleaned up. If you need any help, contact an accounting professional, particularly if it's in a previous fiscal year. There are certain things you should do to make sure it doesn't mess up your financials. So, and what else regarding reporting? So the other report, as I stated before in the reporting section, lots of great reports. So accounts receivable, accounts payable, you want your balance sheet, and you want your profit and loss statement. One thing that I want to point out, and I can't remember if I did this in the last class, is for the profit and loss statement, and pretty much for all the trends reports, I like to look at things by the month. And what mean by the month, because you can actually look at it by trend. So as you can see here, sorry, let me go back. I didn't explain what I did. So I just went to display columns by, and then just selected month. And QuickBooks now will show me the profit and loss statement by month. So this is very good information. So if we look here, we say, okay, oh, okay, Landscaping services for fountains and garden lighting. Okay, February was $1,200. Oh, it's now $50. Okay, what's going on here? So you're looking for trends. You're also making sure that um, you're invoicing, because if you know that you have customers who should be paying you every month, you should look here and say, okay, oh, revenue is $1,000. Oh, this month is 500. Did I invoice someone? What's going on? So this is what you're looking at. You're looking to see, okay, is it consistent? Should it be going down? So this company here is a lawn care company. So since it's winter, they wouldn't have a lot of things going on. So those are the things that you want to be aware of. Also good here, so for your expenses, you know that you always possibly have to pay insurance monthly, so you want to make sure that for your reoccurring expenses, there's always something in the columns. Let's see if I pick, I'm trying to find something big. So, like rent. So, rent is a good example. So, rent, usually you pay every month. January is blank, March is blank so far. So if I was the accountant, I would say, okay, you know what? Why wasn't January not paid? Why isn't March not paid yet? So if I click on this 900, maybe it will tell me why. Who knows? But as I said before, if you click on an amount, it takes you further. It actually takes you to the transaction that makes up that 900. And you can go and click on this bill, do many things. So that's how I like to use the reports. So hopefully this bonus section is helpful. Trying to think of anything else. Oh, mileage. If you're comfortable, you should definitely download the QuickBooks app to your phone and turn on the mileage, because QuickBooks app will automatically track your mileage for you. It comes in really handy. What you can do at the end of the week, you can say which transactions are business or personal. That is a great feature. Instead of having, because I used to just basically keep a notebook in my car and have to write things down. You don't have to do that anymore. So let's see what else. I think that's it. If once again, if you have any questions, email me. I'm gonna just put my email up. There you go. I also offer um, just mini lessons on YouTube. I'll go ahead and bring that up here so you can see. And these mini lessons, sometimes they last from 3 minutes all the way up to 10 minutes. And inside financial group, and this is me. So just make sure yep, that's me. You just make sure you select, and feel free to, you have any spare time or just want to learn more about accounting. There's like tons, I wouldn't say tons, but to me it's tons of videos. I can't believe I made so many videos so far. So lots of different videos about different things, bookkeeping, tips, equations, things about QuickBooks, the latest, what is a balance sheet, and then how to understand it, how to dissect it, so information regarding PPP, a lot of different things. So YouTube, once again, is another um, great tool if you want to learn more about accounting. And particularly they're on the reporting side too, because I talk a lot about the reports and how to dissect them and what things mean. So hopefully this was helpful, and hopefully you will join us for our next class. Thank you so much.